Okay, let's now talk about HINDUJA Global Solutions. The company has too reported their numbers. The net sales have been up by about 4.5%. EBITDA has seen a bit of a downside there, 22% down. But let's speak to the management. Partha Sarkar, who is the global CEO from HINDUJA Global Solutions, joining us on the phone line. Mr. Sarkar, thank you for joining us. First up, we understand that Q1 is seasonally soft quarter, but your operational and bottom line performance has fallen for the second consecutive quarter, and it's more than expected. Now, this can't be attributed to seasonally alone. What's leading to this drag?
Firstly, good morning. And yeah, you're right. We did not expect these numbers. One of the things that has impacted our bottom line has been our Canadian performance. We faced some headwinds in Canada, driven by increase in minimum wage rates and then withdrawal of some tax credits that we used to get from the government for creating employments. We haven't yet been able to counter those with price increases from our clients, so the negotiations are on. And once those negotiations are done, we believe that the Canadian operations will turn around. So the impact on the bottom line has not just been seasonality, even though that always is a factor for us in Q1, but it's also the performance of the Canadian operations, which we believe will recover over the period of this year.
Okay. And in Q4FY15, Mr. Sarkar, your revenues were hit by weather and labor issues in Canada, and contribution from Europe and India too had declined. The US and Philippines could not offset it then. What challenges are persisting, and how is recovery looking amid these mixed trends?
I would say that our growth will be, again, as usual, very strong. We had actually three massive public sector wins, two of them in the UK, and that's about $10 million each. So that's about $20 million straight. And then we've also had another public sector win in Canada. That's about $6 million in annualized revenues. So, and that's come pretty early in the year, and they will start their business from Q3, so we'll see part of those revenues coming in the rest of the year. So growth momentum is not an issue. The problem that we have in Canada are very specific to Canada. The rest of the geographies are really doing well. So we continue to be optimistic about growth, and the margins will improve from here on because it's impact of seasonality that's playing out in this quarter.
Talk about margins in greater detail. Now your margins have cracked about 500 basis points in 2 quarters. How do you see that recovering over the year, and what levels would you be targeting and key drivers for the same?
The two things. I said that we are renegotiating one of our key client contracts to reflect the higher cost of operation in Canada. We are hopeful that that will come through, so that will restore some of the margins. We've also undertaken some cost containment measures in North America. That is also expected to play out in the second half of the year. And with growth coming in, the capacity utilization will improve. So that's what makes me pretty confident that the margins will be back in our operations in the usual Q3, Q4 timeframe.
Okay, Mr. Sarkar, we leave it at that. Thanks very much for joining us on the show and sharing your business outlook with us on Hot Stocks.
This earnings season, there's only one channel India Inc. is talking to.
Company has to grow to ensure that the income keeps.
For now consecutive 10 quarters, we have exceeded the guidance.
Assets grew 32% again. We will be able to open about 60 plus screens this year.
We are still on track for our EBITDA growth.
Depending on the volatility in the market.
ET Now, unbeatable on corporate earnings.
Make note of some important flashes coming on your screen. That's Nestle Global announced their numbers, and Nestle Global H1 organic sales have been reported at 4.